2020 has been one hell of a year, and we're only 5 months in. This market is testing everyone, and me included, but also this has been some of the best trading that I've ever experienced. In my almost 4 years of trading, I haven't been more confident in my skills and analysis than now. Everyone is acting on impulse, which makes an experienced trader's job, like mine, very, very easy. You just have to read the through line. In today's video, I want to show you exactly what you need to do to trade this new market and how this pandemic has affected everything and using it to your advantage. Now, first, I know this sounds morally repugnant to be benefiting from a worldwide pandemic. I understand how this is a sensitive subject, but living in a capitalistic society, every problem is seen to have a solution, and typically a profitable one. I come from the viewpoint that if a company adds value to the world by developing products and services to combat the virus, and I can benefit financially from it, then my conscience is clear. If you have a problem with this, you have a problem with the stock market in general, and this video isn't for you. I'm a small cap trader. I have been for the last 3.5 years now. I trade the trash that most investors leave by the wayside, which in turn gives me a very, very low competitive market space. It's a bunch of lower price stocks between 50 cents and $10 per share that react in percentages very, very quickly. Simply put, a move from $2 per share to $3 is a 50% return, but the same gain of $1 per share on a $10 per share stock will only net you 10%. Pretty much, the lower the price of the stock, the faster you can grow from the same amount of move. And the affordability of shares is also a big plus. The catalysts that move prices have shifted from being earnings, contracts, and mergers to being glorified pump and dumps. Companies now don't even need solid news that show progress and longevity. But as long as they sprinkle some Covid-19 or Corona news into the report, there will be a sharp reaction from those who are looking for the next payday. I brought this to attention to my team early on, and later the SEC indicted 23 companies that were clearly falsifying reports trying to capitalize on the pandemic. But this isn't anything new. The same thing happened as the popularity of cryptocurrency exploded, and a lot of people didn't know what they were buying, but just that it was popular, and that's exactly what fraudulent companies feed on. Me being aware of this was passed down from my mentors, and hopefully this passes down to you. So before all this, what was my strategy to play small caps? Well, it was very simple. I wake up around 30 minutes before the market opens, which for us is 8:30 Central Time. I look for the biggest movers on the day, including post-market and pre-market movement. Stocks that move during this time are a result of early news releases, which help me find the runners very, very early in the day. Now, there's more than just support and resistance for a stock. There's psychological points and historic levels that influence everything throughout the day. This is why it's important to look at 2 time frames side by side. Especially for me, I use the 1 minute, 1 day, and also the 1 day, 1 year chart, since you have a broader spectrum to base decisions. Breaks above and below intraday support and resistance cause predictable reactions as stop losses are broken through and fear floods the market. I want to spot price structures that are easy to see, like pre-market highs or whole number supports, because they react very predictably. This seems pretty easy, but the devil is in the details. As it pertains to getting in and having confidence, I also want to see the stock pull back and confirm that level as being broken. You don't want to just see the break of price, but also that the level has buyers sustaining and willing to enter there, which is what I look for in pullbacks. Pullbacks are like the litmus test for price action. It will either confirm support is there or inject fear and weak hands will fold. So the goal is to wait for the pullback, giving you a relatively cheaper price than just buying at the high of the day, which is very, very dangerous to do. Now, this strategy is still valid, which I still use to this day, but where I have modified it is as it pertains to the pumps. Right now in the foreseeable future, the COVID-19 name and anything associated will have sharp reactions based on such open space for companies to develop vaccines, distribute the vaccine, monitor the spread, and much more. It's like 2018 all over again, when stocks would double in price by just mentioning blockchain and Bitcoin in news reports. The thing here is, as fancy worded a news report can be, most of the time the fundamentals of the company haven't changed at all since the news has dropped. For example, if company XYZ has consistently been going negative on earnings reports and missing revenue estimates, but the report that the company has started developing a vaccine to fight the pandemic, the stock can easily triple in price based on the hype. Now, the real question is, will the stock maintain? Or will it go higher, or will it correct back down? 90% of the time, these companies will correct to a much more sustainable level, maybe at the end of the day or 2 days from now. But being up 200% in 2 days is no way in itself sustainable. I trade by the notion that stocks become much more predictable in the extremes. This is how I profit from a stock that drops 80% overnight and corrected upwards as people average down to get a lower holding price. And a stock that gaps over 150% overnight will correct lower to much more sustainable points, and I'll short the breakdown. Shorting is in essence playing the opposite logic of longing, selling first and buying back, or covering at a lower price. In a stock that has moved large percentages overnight, I'll look for the common supports and structures other buyers will be referencing for their stop losses, since most if not all longs will use a stop loss below the nearest level of support. And I look for that to be stopped out and mass devaluation, which will happen very, very quickly on an overgapped stock. Is typically a death sentence. This is called stop hunting, which big institutions and traders use to control momentum. I look for these actions because it helps determine the direction in the long run much more accurately, since I'm not fighting the wave but riding it. You can usually tell stops have been executed by very quick volume spikes followed by sharp declines right as the price dips below support. Now you can see that I'm pretty much doing the same thing long and short, but the orders are flipped and the initial setup is different. If the stock is easy to borrow, you can short and enter the position anytime. Hard to borrow and nothing to borrow stocks require brokers where you can locate shares, then short, which have fees associated with those actions. All in all, you have to see every opportunity in long and short and who has the favorable advantage. Now that you have a blueprint of strategy to use, and it's best to know that my strategy isn't one size fits all, but a lot of things here will help your trading. Experience, account size, market conditions all affect how accurately you can replicate a strategy. The best way to measure growth and to see if you're improving is by using a trading log platform. I personally use TraderSync. It's a beautiful platform that logs your trading activity and can give you recommendations to stay in the more profitable side of things. It's good to analyze what price ranges you're more profitable in, times of the day, even share amounts. Logging trades is all about finding the connection between your losses and winners. If I have a higher win-loss ratio in stocks above $5 per share than below, then I know I should target more of my trades in that area. You can see here, I'm much more profitable in the early mornings than later in the day, which most likely is due to stocks having higher volume and quicker, more predictable moves out of the gate, so I'm more effective in that area. Day by day, you try to improve and connect the dots to ultimately build your most profitable niche. This will take months, but guaranteed it will all be worth it. If you're interested in TraderSync and any tools that I use, the links will be down below in the description. Hope you guys enjoyed today's video. We're almost at 70,000 subscribers, which is pretty awesome. Love every one of you guys. You guys keep me motivated to keep on making more videos. I know the whole coronavirus thing is a touchy subject right now, but especially I really want to show you and guide you guys through this market time, and hopefully you guys can get to the point where you can consistently be profitable, and that's the main goal. So hope you guys enjoyed. You'll see me next time on YouTube. Eat, Sleep, Profit. Peace.